Amid U.S. tariffs and economic uncertainty, experts say Metro Vancouver's housing market is slowing down and it's impacting new builds.
It has not been a great period to get new developments off the ground. And while we currently have the scenario of excess inventories, that also means that as we're not building for the future at this point, we are at risk of having a further housing shortage when it comes a year to 2 years out.
He says housing starts have declined by 30% compared to this time last year. Some housing advocates say policy reform is needed at a municipal and provincial level to ensure homes continue to be built.
Nothing has really fundamentally changed with the way we get housing built. So the economy is slow right now. Housing starts are declining. That's understandable, but that's very cyclical. And what we really need is to reform systems, permitting, zoning, development fees, so that housing can get built even at a lower price.
He says it's concerning to think BC's housing crisis could worsen. Even with prices expected to trend down, he says with the high cost of living, most housing remains unaffordable.
Now is the time for governments at both the provincial and federal level to really put their thumbs on the scale for housing affordability.
And while the slump is an opportunity for first-time homeowners to get into the market, there is another factor impacting buyer confidence: fluctuating mortgage rates.
Mortgage rates in Canada follow the bond yields, and in particular, the U.S. bond yields as well. You know, if you think to the U.S. and the on again and off again of the tariffs, that's kind of where the mortgage rates went as well.
The cost of borrowing may also change, with the Bank of Canada set to make more policy announcements on June 4th. Both Ing and Yu predict at least 3 more interest rate cuts by the end of the year. Janella Hamilton, CBC News, Vancouver.